Hello and welcome to this new edition of Bourdais Monday Report. Over the weekend, a large-scale operation led by the United States and Israel against Iran began. The channel through which this impacts the global economy is the movement in oil prices. At this stage, the issue is not related to oil production, but rather to the closure of the Strait of Hormuz, through which 20% of the world's crude oil passes. This morning, Brent crude prices are rebounding by 7 to 8% and are approaching $80 per barrel. As you can see on the chart, market participants had partially anticipated this military intervention, and the trajectory of oil prices was already trending upwards. The extent of the impact of rising oil prices on the economy will obviously depend on the duration of the operations. If they were to continue and spread, the rise in prices would particularly hurt household consumption and could trigger a recession. This is a risk, but at this stage it is not the central scenario. In fact, last week we saw the release of the US Consumer Confidence Index. In February, confidence rebounded more than expected. But this increase appears to be fragile. It relies exclusively on the improvement of the future component of the index. However, with the rise in energy prices, it will likely deteriorate next month. The American consumer is increasingly becoming the weak link in the US economy. Unsurprisingly, stock markets opened in the red this morning. We are seeing a decline in risk appetite, but no panic. Losses in equities are around 1 to 2%, and gold is playing its protective role by rising more than 2%. It should also be noted that the US dollar is strengthening, even against the Swiss franc, a sign that the American currency remains a safe haven in times of conflict. Last week, gold had already recorded the best performance, rising by 3.9%. In equities, the underperformance of US stocks continues. US indices are down 0.4%, while Europe is up 0.5%, and emerging markets are almost up 3%. Sovereign yields fell by about 10 basis points in the United States, allowing bond prices to rise by 1%. This week in the United States, we are expecting the release of the Purchasing Managers' Indexes, the ISMs, in both the manufacturing and services sectors. We will also have the release of retail sales figures and, most importantly, the February employment report. In the Eurozone, the focus will be on February's inflation figures. Last week, we also had the presentation of Q4 2025 results from the American company Nvidia. Management announced record results, with revenue of $68.1 billion and a gross margin of over 75%. Despite the excellence of these figures, the market reacted negatively. Nevertheless, we believe that Nvidia remains at the heart of the artificial intelligence theme and is indispensable. The stock therefore remains in our portfolios. That's all for today. Thank you for your attention and see you next week.